We're AIG and we're here.
To help secure retirements and protect financial futures.
To help communities recover and rebuild.
For companies going from garage to global.
On the ground, in the air, even into space. We're AIG.
We repaid every dollar America lent us.
And gave America back a profit.
We're here to keep our promises.
To have your back when you need it the most.
To help you realize a better tomorrow.
The Insider Exclusive Investigative News Team has uncovered a story of AIG's subsidiary, National Union Fire Insurance Company of Pittsburgh, Pennsylvania, that they don't want anyone to know about. It's one of the worst cases of insurance company abuse that we have ever seen.
In a perfect world, insurance companies would always do the right thing. Yet in reality, the industry harbors a dirty little secret. People are giving them money for something they will never receive. What that really means is they're selling uncollectible insurance. Insurance companies rule our country. They control our banking. Look at AIG, too big to fail. They own Wall Street. They catch a virus and Wall Street has diarrhea for a week. And when interest rates fall and their investments earnings plummet, then they run to Congress and scream tort reform. Lawsuits are killing us, they scream, and those greedy trial lawyers are to blame by filing frivolous lawsuits and convincing ignorant juries to dole out obscene verdicts. But ironically, what you don't know until now is that insurance companies regularly and deliberately invite lawsuits whenever the cost and hassles for a third-party claimant look to exceed all potential for recovery. Rather than just doing the right thing, too many insurers prefer to play a game of litigation chicken, a frivolous lawsuit strategy in reverse. Don't like it? Sue me.
So when AIG says,
we're here to keep our promises.
To have your back when you need it the most.
To help you realize a better tomorrow.
Don't believe them. They're totally untrue. Just like the promises and guarantees AIG's subsidiary, National Union Fire Insurance Company of Pittsburgh, PA, makes on its disability insurance coverage. In this Insider Exclusive Investigative Network TV special, our news team goes behind the headlines with Terry Coleman, partner at Pillsbury Coleman, to expose AIG's National Union Fire Insurance Company of Pittsburgh, Pennsylvania, illegal and deceptive practices on national TV, in how insurance companies cheat disabled clients. Jaime Blanza's story. On December 30th, 2012, Jaime Blanza, a 65-year-old semi-retired janitor, was helping his son-in-law repair a backyard fence. Jaime slipped, hit his head on the ground, and severed his spinal cord at C1 through 4, rendering him a quadriplegic. Jaime Blanza and his wife had purchased accidental disability insurance through their credit card company, underwritten by National Union Fire Insurance Company of Pittsburgh, PA, a wholly owned subsidiary of AIG. They had paid for the coverage for more than 10 years. In March 2013, Mr. Blanza's daughter, Mary Ann, submitted a claim for the benefits on his behalf. She sent them all the medical records and photos showing her father was a quadriplegic resulting from his fall. Initially, AIG's call center would never confirm Mr. Blanza would be entitled to benefits following the one-year waiting period. On September 23, 2013, they told her the claim had been denied due to inactivity. She immediately sent in all the records again by certified mail. They ignored her, wouldn't confirm coverage, and wouldn't pay, even after the one-year waiting period expired. In January 2014, she again was told the claim was supposedly in process. The Blanzas needed the money to properly care for Jaime. The law firm of Pillsbury Coleman has been handling disability insurance bad faith cases for over 20 years, and this is one of the worst cases of insurance company abuse that they have ever seen. The coverage was marketed as endorsed by the late Superman actor Christopher Reeve. Mr. Blanza suffered the exact same injury. National Union has been sued in class actions throughout the country for issuing this specific coverage in a false and misleading manner by not being clear about the narrow circumstances under which an insured would be entitled to benefits. Total disability due to an accident with severed limbs, paraplegia, or quadriplegia. This case highlights the crooked world of accidental disability insurance sold through financial institutions. Unsuspecting credit card customers get inundated with solicitations for disability insurance with grand promises of income protection. But the fine print has severe limitations on coverage. And when somebody is horribly disabled and obviously entitled to benefits, their claim gets totally ignored. The most vulnerable among us are left powerless to get their benefits. Throughout his career, Terry has seen many innocent, hardworking people get victimized by their own insurance companies in the name of greed. And because of that, he is driven not only to get justice for these victims of injustice, but to make sure that all policyholders get 100% what their insurance companies promised and what they paid for. Plus, get it without hassle and on time. Terry has earned the highest respect from citizens and lawyers alike as one of the best trial lawyers in San Francisco, in California, and across the nation. And he has built a substantial reputation nationwide by consistently winning cases other law firms have turned down. His amazing courtroom skills and headline-grabbing success rate continue to provide his clients with the results they need and the results they deserve. This is the Insider Exclusive, live from San Francisco, California.
It is my great pleasure to introduce Terry Coleman to the show. Welcome to the show, Terry.
Oh, thank you so much. Pleasure to be here.
It's good to be back in San Francisco. Tell our audience a little bit about your law firm. What type of law does your firm practice?
Our law firm only represents insureds against their insurance companies. So if an insurance company denies a claim, refuses to pay out benefits, we're privileged to represent those individuals.
Today we are covering a case like that.
One of the worst that we've seen.
Yeah, and the gentleman, your client's name was Jaime Blanza?
Jaime Blanza, yes.
Tell our audience who Jaime is.
Mr. Blanza is a retired 65-year-old former janitor, and he was helping his son-in-law repair a backyard fence. Unfortunately, he slipped, hit his neck, and was rendered a quadriplegic instantly. Fortunately for Mr. Blanza, he had disability insurance that he had paid for many, many years through his credit card company, and he was insured by an AIG company called National Union.
Right, and this is, these type of policies are often sold through credit card companies, aren't they?
They are, and
they usually cost what, about $30 a month?
Exactly, that's exactly what they paid.
And why would anybody want to buy a policy like that? What's the end result?
Well, it's marketed in the materials that you get from your credit card company and so forth about all the wonderful protections that if you had a catastrophic accident happen to you, then you have a wonderful benefit. And in this case, you know, they promised to pay $1 million if he was rendered disabled, unable to work, and suffered a bad injury.
Yeah, now there's some fine print in these policies, isn't there?
There is.
Tell us about the fine print in this policy, well, AIG's policy.
Number one, you have to be disabled due to an accident.
Right.
And most people are disabled due to sicknesses.
Yeah.
But more importantly than that is what it means to be disabled. Now, it's not just an impairment and inability to work. You actually have to have either a severed arm, severed foot. Now, you can't just have one arm or one foot. You have to have both. You do. So, yeah, you'd have to have...
That's in the fine print.
It is in the fine print. Or quadriplegia, paraplegia, or hemiplegia.
Mm-hmm. And those are the only... those are the real specific requirements, right?
That's right.
You lose a foot, you don't qualify, right?
Exactly. If you just lose one foot, you're out of luck.
Okay.
And that's not all. So you also have to be disabled for an entire year. There's what's called a waiting period. So the insurance company, once you get injured and disabled, they don't pay right away. It's designed, you have to wait. You have to live long enough. Yeah. You have to live more than a year, and then we'll pay you your money.
Yeah. Now, if you didn't live long enough, what does the insurance company pay then?
Well, then they pay only $5,000.
$5,000. So it's $1 million or $5,000.
Right.
Okay. What was Jaime's problem? His daughter, who will be on the show later on, she filed all of the claims. But what kind of problems did they encounter?
Yeah, it was quite incredible. Well, as you can imagine, Mr. Blanza, he couldn't submit the claim on his own, and in fact, he was still in the hospital when his daughter, who overtook all of his affairs for him, she submitted the claim. And just submitting the claim was difficult because who do you call? You know, you're not really provided much information from the credit card company or the companies that market this. And she was finally able to track down the insurance company's telephone number and was able to talk with them. And she submitted the claim forms. And then it was radio silent from the insurance company. They just wouldn't respond. What she came to find out is now that although the policy was issued by this large insurance company, AIG, National Union, they shipped her claim off to a call center over in Jacksonville, Florida, to process the claim. And she called over and over and over again, was never able to talk to the same person more than once, was never given any information as to the status of the claim or anything like that. What happened was after she submitted the claim, they asked for medical records to substantiate the fact that he had an accident, and it was caused by an accident, and that he was a quadriplegic.
Yeah.
And she immediately provided that. And then there was radio silence from them, call after call after call. We have records, we got her cell phone records that document all the times that she called the call center, over 20 times in a 5-month period.
Never a return phone.
No, never a return phone call or a letter.
Never a return letter.
No letter giving her a status as to any additional information that they would need, or that, you know, after the 365 days, we will be paying you the money. And that was incredibly important for them because this was a family that was struggling to care for their patriarch.
Right.
Mary Ann and her husband and her children had to move in to her father's house. It was a very small house. By the time that he came home from the hospital, they had his hospital bed situated in the living room. They had 3 generations living there in a very small space, and they didn't have the funds in order to make modifications to the home that would help bathe him, care for him, and so forth. And the insurance company wasn't giving any assurance that they would ever pay the money. And that was the most frustrating thing.
What happened next?
Well, Mary Ann finally called again, wondering what was going on with the claim, and this was in September, so a good 9 months or so after she submitted the claim. And what the individual told her over the telephone was that the claim was closed due to inactivity.
Yeah, but that was their own internal rule, wasn't it?
That's exactly what we've come to learn, is that they have an internal rule that if they don't enter some additional information on their computer system, even though there's all these phone calls that she was making to them, then the claim is automatically closed.
So, you know, hypothetically, it's possible that someone files a claim, and even though many phone calls, many requests for information come in there, if nobody entered anything into the computer on their end, it's inactive, and they close the case, right?
Exactly. It's a classic case of burying your head in the sand and hoping the claim just goes away.
Yeah.
And that's exactly what some of these bad insurance companies do.
What finally happened with this case?
Well, Mary Ann, when they told her that, she contacted us right away.
Right.
And so what we had her do was, well, resubmit the claim and submit some additional information for them. Submit some photos of your father so that it's obviously undeniable that he has this condition, he's entitled to the benefit, and I expected that the claim would then be paid.
Yeah, and your firm offered basically to do this for free.
Oh, absolutely.
Right, initially, correct?
Yes.
Because you thought, hey, it's pretty obvious what happened here, right?
No rational person looking at this wouldn't instantly pay the claim.
Right.
I just couldn't believe that they wouldn't do it.
But
they didn't. But they didn't.
But they did, and you filed suit against them, and what was their response?
We did. We filed a lawsuit, and they denied every allegation of the complaint.
Yeah. They denied that he was one of their policyholders. They denied that he was a quadriplegic. They denied that he was disabled, right?
They denied everything. Everything.
Yeah.
And, you know, it is absolutely outrageous to treat your insured that way.
Mm-hmm.
You know, the Blanzas were insured by this company for more than a decade.
Yeah.
They did everything that was required of them. And in return, when they needed the insurance company the most, the peace of mind, the security, and the money just to pay basic care and living expenses, they get nothing. They get stonewalled.
Right?
Absolutely.
Now, since you originally came to us with this information, you know, the case, there has been an update on this, right?
Well, there has been.
What has happened?
Well, what we come to learn is that a month before Mr. Blanza had his accident, this company, AIG National Union, was under the microscope by the state's Department of Insurance. Multi-state regulatory settlement agreement got entered into 1 month before he had his accident.
Yeah.
The company was fined a total of $51 million by the states, and they promised to change their ways. They promised to not delay out on claims and to have improved claim processing, but that isn't what happened. And when I learned of this information now, this makes the Blanza's case extremely important, not only for them, but also in order to make meaningful change for every other insured by this company.
Right. Has there been any progress in his case since that time?
Yes, we were finally able to get payment of Mr. Blanza's benefit for him.
Yeah.
And we're continuing to pursue the additional claims, including, you know, the attorney's fees and the costs that we did have to incur in order to convince them to pay, as well as punitive damages, so that this won't happen again.
Yeah, and punitive damages for our audience is basically the court awarding additional monies to send a message not only to the company but to everybody out there that if you treat your policyholders who in good faith have paid according to your schedule on time every month, like in this case 10 years, you can't treat people like that, right? There has to be an additional punishment, correct?
The punitive damages are designed to change corporate behavior.
Yeah.
And it really is the only way that you can change corporate behavior. And it's by the community. So, you know, the citizens here in San Francisco will have an opportunity to say, don't do this again.
Right.
And this is how we're going to deliver our message.
Right. Well, you did a good job, and the case continues. And fortunately, we have Jamie's daughter here with us today, Mary Ann. So let's bring her on right now. It is my great pleasure to introduce Mary Ann to the show. Welcome to the show, Mary Ann.
Hello.
Boy, you've lived through an ordeal, haven't you?
Yes.
You had this your dad had this policy that he paid for 10 years. And when you went to, and he did everything right, file the claim and provide all the information, the insurance company did what?
They delayed everything, or even canceled it, claiming it was inactive.
Yeah. How did that make you feel?
It really frustrated me. And, you know, I'm trying to get benefits for my dad in order to, you know, help pay for services that he could, you know, specifically caregiving costs. But it makes it hard when they're not trying to help me out, when my dad is obviously entitled to these benefits.
Yeah, you've had a close relationship with your dad all the years. In fact, you guys lived in the same house, didn't you?
Oh yeah, we all help each other out.
Yeah, and when this unfortunate accident happened, your immediate concern was, how are we going to take care of him? Correct?
Yes.
How did you know he had that policy, by the way?
He told me.
When you tried to do this yourself, dealing with the insurance company, you had the doors being shut in your face all the time. How did you hear about Terry's firm?
I did some research on the internet regarding disability insurance and how to get help getting the benefits.
And when you first met with his firm, because there's a lot of lawyers that claim they can help you, but what impressed you about his firm?
How quickly they got back to me. I first spoke with Ray, who kind of gave me a little bit of information and got some information about what was going on. And then Terry called me, personally to, give me advice and kind of guide me on what the next step would be before, he actually took it to court or anything like that.
That's important to us when we select a show, not only the result, but the working relationship between the client and the law firm and the lawyer, because there are a lot of lawyers who claim they can help people, but they really don't have their heart and soul into it.
Yeah.
What do you have to say to America when they're faced with a similar problem? They're getting rejection notices, they're getting get lost notices from an insurance company. What do you have to say to them?
Well, just to keep on trying. If you can't seem to get past them, of course, then the next thing to do would be to seek professional help, which I found Terry, and he helped me greatly.
All right. Well, thank you very much for spending time with us. We really appreciate it.
Thank you for having me.
You handle a lot of cases that deal with insurance companies. Oftentimes they're bad faith insurance. Bad faith meaning the insurance company does not live up to the words that they said that they would, right?
They acted unreasonably towards their insured, tried to take advantage of them.
In fact, in all the years that we have been doing this show, there's a little motto that I've come across, and you know it well. Insurance companies' motto is, let's deny the claim. Then once we can no longer deny it, we'll delay the claim. And then the third thing is they will defend the claim. In other words, insurance companies sue more people than any other industry in the United States today. A lot of people don't know that. Do you see some of the common bad practices of insurance companies when it comes to paying claims for policyholders?
Well, oftentimes they just abuse their insureds. They ask for information that either is totally irrelevant or that they already have, just to put additional hurdles to their insureds in order to collect their benefits.
And it's a fact, and I think we talked about the show, before the show, that I've read that 62% of the policyholders who get a letter from their insurance company that said, we deny your claim for whatever reason, they just disappear, which is a crime.
Right. Well,
it's real criminal.
It's when you put up all those hurdles, in dealing with the insurance company, and it becomes overwhelming to people. And a lot of times these are people that really are the most vulnerable among us. They are the most they're the individuals that are most susceptible to those kinds of claims tactics.
You must have a lot of folks call you. You're well known for doing the kind of work that you do successfully. How do you select your clients and the cases? There's tons of them out there.
Well, there are, and we have been fortunate to be able to do this area of law exclusively for quite some time. And so we are known in the community. We do give everyone who contacts us individual attention. That is, we go through the documents, we sit through, assess their situation, and see if there's some way that we can help them. Sometimes we can't, either because the claim just doesn't come within the coverage. But more often than not, we're able to help people. And so we take great care in selecting the cases that we do take on, because it is expensive. As you can imagine, when you sue an insurance company, they have an army of lawyers to defend them. And so we're very careful and selective in those that we do take on. But once we do take one on, we take it on all the way.
And I want to emphasize for our audience that when someone comes to you, you take on a case, they don't have to pay you any money up front. It is only if you win a case do you earn the fee that you've agreed on, right?
That's right. We call that a contingency fee. And so we only get paid if we do win or get a recovery for the client.
While the other side, their lawyers are billing rather. The words are synonymous.
That's right. That's
their
right.
client, the insurance industry, because they get paid regardless, right?
That's right. And that is a built-in incentive to try to delay the proceedings as long as possible.
I want to thank you very much for being on our show again. This is a great case, and it goes on, and keep us posted, okay?
Absolutely. Thank you.
You're welcome. Thanks for joining us. You can get more information about our guest and the issues at insiderexclusive.com.